If you've ever bought at the top or sold at the bottom and you feel that you just can't make profits, you look around, everybody else is doing just fine, but for some reason you just can't make it. I'd like to share with you a trick and a lot of tips inside this video to break that cycle. Let's run the numbers. I've been inside financial markets for nearly 4 decades, and one thing that always perplexed me as I started my journey: why are the percentages different on different things? Why does something go up far more than something else, and why does it go down far more than something else? The answer to that question is structure. Structural levels are vitally important to understand. If you don't understand them, you will be guessing. If you're guessing, you're gambling. If you're gambling, the house will take your money. There's no question about it. It's just a question of when. I used to think that prices went up and down in relationship to the news. After all, the news changes every day and prices do too. So that's gotta be it, right? The news changes the price. People are led to believe this, but this is not correct. The news, of course, is important, but it's not the major driver of price, because price moves even without news events. What you will find is that the interdependency and intercorrelation between Tier 1, Tier 2 and Tier 3 charts moves price. It takes many years to learn this factor. The news is just opinion, price is reality. The two couldn't be more different from each other. Just about everybody has heard about support and resistance levels, but support and resistance levels are not all equal. Structural support and resistance levels can be drawn up from two very different perspectives, and it's a sad day Charlie Munger at age 99 has died. Charlie was never a fan of crypto or Bitcoin or anything like that. He was a traditionalist. But he was also one of the greatest investors of all time, and especially with his good friend Charlie and Warren, led one of the greatest investment houses of all time, Berkshire Hathaway. When you're first starting off your journey into investing and trading, everything will look disconnected. A lot of people will tell you there's no correlation between the stock market and crypto. They are absolutely incorrect. All asset classes are intercorrelated and interconnected. It's just the way of financial markets. And when people understand this, they don't make such simplistic notions up about how the financial world operates. One of the fastest ways to get consistently profitable is to get out of Zone 1 and Zone 2. These are the first 2 stages of the 4 stages that all profitable traders and investors go through. Unfortunately, a lot of people get caught in the panic zone and the blame zone. This is where people require certainty. Certainty will absolutely guarantee you buying at the top and selling at the bottom. When you have an understanding of structure, you enter Zone 3 and Zone 4. That's where you need to be. The world's most powerful structural method is the CTKS method. And when we look at the Tier 1, Tier 2 and Tier 3 charts, they all explain what happened in the markets in the past 24 hours. When you become familiar with how to read them, you'll understand what can happen in the market in the next 24 hours. CTKS risk management is all about understanding that prices can go down, they can go neutral, or they can go up, because price is always moving in a wave. When price comes down, that doesn't mean it's the end of the world. That just potentially means it's a normal retrace. And when price goes up, it doesn't mean it's going to the moon. It's just price moving in a wave. Price moves in waves is rule 4, and it's a really powerful rule. Price is always going up and down, up and down. That's what it does. To become consistently profitable, you must be able to withstand the red days. You also need to be able to understand cross-correlations and cross-interdependencies between charts. Yesterday, I put dollar-yen up, and a lot of people would say, what the heck has Forex got to do with the stock market or crypto? The answer is a massive amount. If dollar yen goes down, it means the DXY is being subjected to negative price momentum. That means that the yields, the US 2-year, the US 10-year, are likely to be coming down. Junk bonds is likely to be rallying. All underneath the hood, this will force the stock market up, commodities up, and crypto up. It matters. When people don't know how the Tier 1, Tier 2, and Tier 3 charts intercorrelate and interconnect, they just guess. Most people only trade the chart that they're putting money into, and of course that means that you're just looking at something without understanding the broader context of the market. If the market is retracing, what you're looking at will in all likelihood retrace as well. We also saw yesterday that the euro dollar was potentially on the cusp of breaking out, and that's exactly what it did. I put hints into each video, and sometimes I don't talk about them too much, but if I put it in, it's relevant to you. If you're liking the content so far, please smash that like button and subscribe. We have an incredible global family. You'll see that from the comments. They're just amazing people. We've seen that the DXY has been under torment. As the DXY comes down, what do the main markets do? They rally. Cross-triangulation would say that the US 10-year, when it fell off a cliff, and the US 2-year, when it fell off a cliff as well, would just rally the markets, and that is exactly what happened. I put the US 10-year and the US 2-year into the video yesterday. I did this to show you that they were weakening. Understanding from a broad level how intercorrelation and interdependency works is incredibly important. That will take you so far, but understanding structure is the real game changer. For example, when we look at the structural levels on gold, one thing that we see, we were breaking across a very steep level of structural resistance back here at around that 2001 level. When we broke above that, the next key level was this 2016 level, when the yields and the DXY absolutely tanked. Gold crushed through this 2022 to 2026 level, and we've seen it come up and just baseline, turning this 2039 level into structural support. If gold continues this way, and that will depend on the DXY continuing to fall and yields continuing to fall, we would expect to move up to 2060. Everything is structurally dependent. When you see gold doing something like this, breaking out, a lot of people just thought it would immediately go to the moon because they didn't understand where the structure was. Structure is incredibly important, and total market structure is the Rolls-Royce version of support and resistance levels. The only methodology that marks it up scientifically is the CTKS method. With gold, we're going across nearly 70,000 days worth of data. We knew that this structural level at 2016 was inside the market. When people were FOMOing into gold, we said, no, it's not so quick. We're likely to get a retrace to 2009. And then when we get above, we've got this structural area to contend with. But what we saw was the yields get absolutely hammered. The DXY got hammered as well. That meant lean into gold. Many people would say, but I don't trade gold, I don't invest in gold, I don't care about gold. And that's fair enough. Gold is pretty shiny, but it's not everybody's cup of tea. As a community, we love crypto because it's so incredibly volatile. Unlike the stock market, which can stay down for extended periods of time, the crypto market is very forgiving. But as always, the crypto market is structurally dependent as well. We can see that when the crypto market was coming down, it just couldn't get it above this structural level. How do you read these support and resistance levels inside the CTKS method? It's really, really simple. If it's not going below, it's going above. If it can't get above, it's going below. If it can't get above that, it's going below, and so forth and so on. At least you actually know where the support and resistance levels are. A lot of people, when they saw the crypto market just exploding up, they would say something like this, oh, I need to get in, look, crypto is exploding. And then what happens? They didn't realize that there was a structural resistance level inside total crypto market cap, and then the price is moving against them. We always anticipate retracements. After all, price is moving in a wave. That's what price does. It's critically important to understand that no alt can escape Bitcoin's gravity, and we look at all the tier 1, tier 2 and tier 3 alts all overlaid on each other. You can see that directional association playing out. For example, if you were looking at Solana just like this with just unmarked up price action, you wouldn't know where the structural level of resistance was. It's at 58.29, and you wouldn't know where the safety net was. For example, if price was coming down rather quickly like this, you would think, the thing is going to zero. No, it's going to a structural level. Price is always rebounding structure to structure, structure to structure. That's what price does. And when you understand where the structure is, that's the starting point of consistent profitability. Trading and investing is not an academic discipline, it's a practical one. If we look at Doge, just a couple of sells from the past day. There's been 1, 2, 3, 4, 5 sells in the past 24 hours. Remember, Doge was coming down and down and down. People were saying, no, this thing is just going to collapse. There's going to be a market crash. And I said, don't let the whales buy what you're selling. Why did I say that? Because anybody who knows how to read the tier 1, 2 and 3 charts already saw that there were good reasons to believe the yields would drop off, the DXY would continue to go down. There was a lot of cross-related evidence showing this, which would mean that gold would rally and Bitcoin would rally. If Bitcoin's rallying, the alts will rally as well. And here you can see the proof. You can buy and sell literally every day. There was 5 sales so far today. When we look into yesterday, there was also 5 sales then. In yesterday's video, I just showed you one of those sales. How do I personally buy and sell? The first thing I do is that I need to know what the levels inside the market are. For example, Doge is coming up to a structural resistance level. It's having a little bit of trouble getting above it at 80.75. So far there's a bit of positive momentum, but if we got a retracement down to the lower one, that would be absolutely fine, 79.11. We know price is always moving in a wave. These are opportunities to buy, not opportunities to panic. For example, as price came down here, I was buying, and then I sold. And this is what you can do as well. You're after high annualized ROIs. We have such an incredible global family. As TF Theta said in yesterday's comments, trust the reality of the charts and utilities, the professional mindset, and interact with the market from that perspective. Thank you, my friend. The professional mindset knows that opportunities reset every single day. Kacharia said, if you miss an opportunity, don't worry about it. There are 100,000 more opportunities to come. And Kacharia is correct. As Dinesh said, controlling your emotions is incredibly important. And thank you to TSP for your very kind comments. If you can identify in Zone 1 and Zone 2, don't worry at all about it, just become aware of it. As Art said, your focus on panic selling today, this is from yesterday's video, made me think, yeah, I used to be that guy. Just guessing and gambling and losing money. With BORSOG, buy on red, sell on green, we understand how to manage our risk. We do our risk management up front. We know what we're going to do with our entire portfolio and any specific position if price moves too far against us. Art said, a few days ago I had an incredible sell on green days, and today and yesterday I've been buying on red again. When you have a knowledge of what you're doing, you know the structure, you know the intercorrelation and interdependencies between charts, all of a sudden everything changes. You're not gambling, you know what you're doing. There's been a real absence of red days recently. It was really good to get one so we could buy up and then sell off the next day. I would like to thank everybody who comments. It's just beautiful, and we have an incredible global family. Who could believe a functional global family on YouTube? Just awesome. And if you've just joined us for the first time, perhaps reach out and say hi inside the comments. I make sure I read every comment. You can see that there are a few things that you have to get a control over in order to become consistently profitable. The first critical step is to overcome the panic zone and the blame zone, to understand probabilities, structure, and have rules about how the market actually works. The market just disregards everybody's expectations and moves between structural levels. This can be very disconcerting when you're just initially starting off. You need to keep a really positive mindset. The fastest way to consistent losses is to not understand CTKS structure. If you don't know where smart money is buying and selling, you're just guessing. If you're guessing, you're gambling. If you're gambling, you're going to lose. If you would like the structural levels that I use each and every day for my own personal trading, and I share them on this channel as well, just pop across to ctksmethod.org and give them a try out. You'll find them game-changing. Always seek to disconnect your emotional state from your buy and sell decision-making process. The true opportunities are spent on the dance floor when nobody else is there. That's where we shine. We're already in a position where everybody has left the market and given up. This is a really important thing to talk about. Generally, what happens as the markets go up, people get more and more excited. Then when they come down, they scatter, they run like hell for the nearest exit. And they, of course, miss the price coming up. You can see the prices coming up. This cartoonist knows what institutions do to drive people away from opportunities. But look at what happens. As soon as they've come back, they've just bought at the top and then they've sold at the bottom. You don't want to be doing this. Please keep this in your mind. It's a very important concept to understand. Don't get elated, don't get excited as price is coming up and up. That's the time when we need to be cautious, not optimistic. We know that there's so many rules inside the crypto market, and one of the most important is the price simply moves in a wave. It's curvilinear. It's not linear. It's exploding and imploding all the time, especially in crypto, but it does so inside the stock market and Forex as well. To become synchronized in with the market, you must know what you're doing. You must understand those cross intercorrelations and directional correlations as well. You need to know the structure of what you're trading and investing in. If you know this, you can buy and sell readily, really easily. But if you're greedy, you'll never sell. Why is that? Because you're meeting the market on your terms, not its terms. The market will never know you. And it can also go the other way. If you're fearful, you'll never buy. Or if you're fearful, you will only buy when you feel it's an absolute certainty. What are absolute certainty points? Well, like this and like this. And then when it comes down, you'll say, oh no, I'm wrong. I need to get out. Right at structural support. The key, do not guess, know. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.